It is Monday, the 25th of September. I'm going to start with stock indexes, in particular the S&P. First off, on Monday, we were at a really tricky level for me in the S&P. And I'm going to start with a monthly chart and talk about where I think that we could be with this bearish reversal. For a long time, a lot of people see that this 5 waves as the high, and we're due for a much bigger correction in the S&P that could bring us down to 2,300. For me, though, I always assume that this is, just a wave on its own rather than an ending one. And I feel like this could be a wave 1 of a bigger wave 5. Inflation can be very spiky. It comes and goes. Either way, I'm thinking that we could see, if we continue any lower here, a bigger 1, 2, 3 wave correction. And a bigger 3-wave correction would bring us down to 37.44, or retest these lows, and potentially down to 3,200 in a bigger ABC correction. And the key for me is, are we going lower here, as I'm going to draw my fibs from this swing low that we made in October 2022 to this high, and say underneath this 236 fib, no matter what, we're in a bigger correction. And so on Friday, that's exactly where we closed, just underneath. And previously, this 236 fib level, which was really important, was support. We couldn't close underneath it in August, and we tried twice, on the 18th and on the Friday the 25th, and potentially we could see more downside. At the moment, though, we are just testing the low from the Friday, the monthly low from the 18th of August, and because it's Yom Kippur, because it's the last week of the month, quite often you get a kind of window dressing rally. And so I think that there is a potential for at least a small rally, and it could turn into a bigger one in month end. Wouldn't say that we're oversold, but this is certainly stretched on shorter time frames, and so we could see a bigger bounce. So what am I looking for today then on the hourly? Well, short term, you can see we made one of those little swing failure double bottoms. So I think that we could see a 3-wave correction, and I would like to see what happens when the market back tests this 236 fib level at 43.67. So short term, that's kind of my bull bear line. People who draw trend lines would draw it like this, high to low, and so that also lines up with that. So if this correction is over, and we're going to see a bigger bounce back to these highs and potentially higher, then 43.67 short term is kind of my bull bear line for today, and I think that's my short term bounce target. So that's what I'm looking for in the E-mini. In the NASDAQ, we're also at a pretty key level. If we do the same thing in the NASDAQ, you can see we've pulled back much further. But if we go from the highs in July to this low, project it from here, potentially this is a bounce level. This is the 786 fib retrace from this low, and it's projected 61.8 level. For me, you have 2 targets on the downside when you measure these moves. This is the first one, and this would be the second one if we break underneath this. And so this is one of those levels where I think we may, in Asian trading, because we've had a pretty ugly night with the fears of an Evergrande liquidation. Again, we've got a little short-term double bottom here, and this is potentially a bounce level in the NASDAQ. Now, if we do the same thing here and we say, okay, well, we're in a little bit of a channel, so this, like this. So this would be my double bottom target, and if we break out and above that hourly 50 moving average, when you bounce from a 786 fib level, your reversal level or confirmation of the bullish reversal is the 61.8. So that's at 15,033. So if we break out, here's the upside target, and if we get above that, if we reverse at this 786 and hold above 15,033, then the bounce target for this week becomes 15,295 in the NASDAQ. If we don't, now if the world is ending, because sometimes I've seen these end of month things go wrong, horribly wrong. When they go horribly wrong, they're not very pleasant. And there's lots going on behind the scenes that could go wrong. You know, a US government shutdown. Yeah, you know, a few wars going on. And so short-term trading, this 14,847 is potentially some nasty resistance. If this was a breakdown and it's going to keep going, you can see from these previous lows, 14,847, if we're going to go and test this upper trend line, is what we've got to first get above. And this is a 15-minute chart. We're not quite there yet. So that's how I'm seeing those US indexes. Same thing in the DAX. This looks like in the DAX a pretty nasty breakdown. And it's the same 236 fib level that we are concerned about in the S&P. Let me take all this scribbles off. Because if I put my fib levels on from the low that we made in October to this high, we are at the moment on the weekly underneath it at 15,412. So if we look at this on the daily, you can see we're just breaking it underneath it now. We're also underneath the daily 200 moving average that became resistance when we tested it on Friday. So potentially we are looking for much lower. So if we can hold underneath 15,412 becomes resistance, 38.2 becomes this next support where this next fib support is, and this swing low. And yeah, that does start a bigger potentially correction. And in the DAX, when we look at this, we could be making one of those irregular flat corrections, where if this is our first swing lower, this is where if everything gets a little bit pear-shaped, then our next target is all the way down here at the 61.8 from this low. And the 61.8 is the DAX's favorite fib level by a million miles. It's just one of those levels that this market always reacts at. So we actually would be looking at 13,604 if we break underneath here and continue lower. So there are lots of bounce levels, not least this 50% and 200 weekly moving average. But for me, you know, for this whole move to be over, I think we could end up here and it could get pretty ugly. So pretty key level. And as I said, you know, last week, sometimes these oversold levels, crashes can come from oversold levels. Plus, because everybody expects a bounce because of Yom Kippur and month end and blah, blah, blah. You know, we could see a nasty little shakeout before that happens. So we need to be a little bit careful. 15,412 is what we need to close back above if we're going to see a bigger bounce and hold this in the DAX. In the FTSE, which has been really strong thanks to the really strong currency, we've got very similar support and resistance, and this potentially in a bigger move means that we've gone 1, 2, 3 down, 3 ways up, and this could also turn into a pretty nasty bigger move here in the FTSE. I'm going to say from this low to this high. Key support is this 236 fib level. If I look down on the 4 hour and put regular candles on, you can see that we're underneath it. So if we bounce on the US Open, we need to hold above 76.20. Otherwise, we are going to see a nasty drop and continuation lower in the FTSE and 75.43 next. But because this is a big ABC, the most normal retrace of that is 786, which brings us all the way back down to these lows, which, yeah, it's looking a bit bearish ahead of the open. My theory is, though, and before we all get really suicidal and jump out the window, is quite often on a Monday morning, if a really ugly Asian trading or a really ugly Monday can be the low of the week, and then we get a bounce after that. So let's see how we go. That's how I'm seeing these stock indexes for now. Let's take a quick look at the TSX and the ASX, because this TSX has been in this consolidation, gosh, for the whole of the year. And with this slightly lower high here, I think we are, whilst we stay underneath 20,000, we are headed back to this 38.2 fib level at 19,531 and should be selling bounces this week. Yeah, Pretty nasty, no breakout at all in this one. And the ASX is at a really interesting level as well when I take a look at this. So here, from the high that we made in February this year, so we're basically looking at this similar sideways consolidation actually to that we have in the TSX. We have gone 3 waves up to a lower high in the ASX and banged our head for the fourth time on this trend line. When I see that, and particularly the 3-wave move, I measure the swings. I measure from this high to this low, projected from here. And the 61.8 becomes key support, because if we get underneath it, we'll continue to the equal measured move. And this, therefore, this 61.8 level, you can see from previous lows and highs, if we look left, is really key support, 7,052. At the moment, here on the daily, you can see we closed underneath it, and it's now resistance. We had a look above it today. To recover this situation, this market really needs to hold above it. And I wouldn't be surprised with month end if we do that. So we have a big swing higher, 3-wave correction, and push higher, but we are pretty sideways at an important level. If everything gets ugly, we break down and continue lower here, and this level becomes resistance at 7,052. 6,779 is the next potential support for the ASX. So let's see how we go.